Good morning, master traders and money magnets. We got to wake up today to be able to do what we love, the pursuit of happiness. What a blessing, guys. Now we need to look at the charts. SPY volatility is still here, but we do have an inside candle set up on the daily chart, which usually signifies chop and some consolidation, but we do have a chop range. Now I want to get it out the way. Uncle Charters, are you bullish or are you bearish? Uncle Charters is a sheep, but if you was to ask me if I'm bullish or if I'm bearish, I would say that I am still bearish. What does it mean to be bullish or bearish? If Uncle say he's bullish, that means he's favoring more upside. I expect more upside. If I'm bearish, I expect more downside. It's pretty straightforward. And I'm always willing to be wrong. Okay, I'm always willing to be wrong, but I'm always following the price action. And the price action changes its mind sometimes, and we got to change with it. But overall, guys, the price action is still bearish. Therefore, Uncle Charters is bearish, and I'm going to explain why I'm bearish and what the price action needs to do to switch back to being at least short-term bullish, because we got to be ready for any case scenario. Our goal is to get a green P&L. Green P&L, that's the most important thing. Get that money so we can, well, do what the heck we want. Freedom, baby, freedom. Yeah, but as far as how we traded yesterday, see, this part of my video is very important because it's educational, and I'm trying to explain and show you guys how to use the level, because that's pretty much my bread and butter of the video, is giving you guys my levels, my pivot levels. Now I wrote in the first post of the day in my Discord, 562 and 560.8 are support. If they fail, 559 and 556.5 incoming or lower. And I wrote if 562 holds as support, 563.5 and 565 must clear, and we'll have those higher targets incoming. So every day, every morning, I identify the levels for us so that we can react to the price action. Okay. Now I mentioned you want to look to short if 562 and 560.8 fails, and you want to look to long above 563.5. This right here is the 930 candle. You guys can see the first setup of the day was breaking down that 562 level, and then breaking down that 560.8 level. Okay. And then when the levels broke down, I alerted to the group 562 and 560.8 failed, putting those lower targets in play. When support levels fail, that's when we want to go enter puts. And look at that beautiful move, guys. Look at that. Just from one setup, breaking down 562 and 560.8, it went as low as 553.6. Guys, that's like a $7-8 move to the downside. Hundreds to thousands of dollars were made just playing the setups, playing the levels. And then from there, because in a volatile market, the bounces are violent. Up and down, there is so much money to be made. Once we drop down, I had a 553.5-ish level. Okay. SPY came few cents shy of retesting it, but we did break down my 555 level, and we did break down my 556.5 level. These are all alerted in the group. But around 11 o'clock, we had the false breakdown setup. Even a bounce like this, we recaptured 555, we recaptured 556.5. Okay, the overall price action is bearish on the daily chart, but even in the intraday with the volatility that we have, a move like this recaptured 555 and 556.5, went as high as almost hit my 562 level. Almost. That was hundreds of thousands of dollars were made on that bounce, guys. Just knowing the levels and the setups beforehand and then reacting to it in real time. Skills, baby, skills. Sheep style trading, up and down. The money follows us when we follow the price action. Level to level style, no greed with runners. Put trailing stop losses on your runners. This is the point of why Uncle gave you the levels, so you can add them on your charts the same way I do the horizontal lines. And you guys can see the setups for yourself and react to them. Beautiful price action. But like I said, we played it to the upside, we played it to the downside, but overall still bearish on SPY. All right. Now, I do also want to mention that yesterday's close, Wednesday's close, it was higher than Tuesday's close. That make yesterday a green day. Even though it's a red candle on the daily chart, it's a higher close than the previous day's close. That makes yesterday a green day. And ever since we've been breaking down critical support levels in mid-February, SPY has not had more than one green day in a row. We push down, lower close. This one right here, this candle right here, let me change the color. All right, that candle right there, February 26th, closed higher than February 25th. That's considered a green day if it closes higher than the previous day. But what happened the next day? Drop. February 28th, we had a green day. Now, that was a very nice green day. But what happened the next day? Drop. March 5th, we had a green day. It was a very nice drop, a pop to the upside. Back tested that 5 DMA. But what happened the next day? Drop. Green day on March 7th. Back tested the 5 DMA again. But what happened the next day? Say with Unco. Drop. And now once again we have a candle that closed higher than the previous day's candle. So my question now is, can SPY give us more than one green day in a row? Can they give us a multiple higher closes in a row? That is the question, because they haven't. Now, if the price action continues to do what it's been doing this past month, then today should be a red day. And if it is a red day, you want to see support levels fail. 559, I have a fib level at 556.4. I have a level at 555 and another fib level at 552. So if it is a red day, you want to see those levels fail. Now, I mentioned we had an inside candle setup and the chop range. The lower level of the chop range is at 552. So if bears can break down 552, guys, we are dropping down a lot lower. I'm bearish. Now we have the top of the chop range around 564. Bulls have a lot of work to do right now. 559, 560.8 must clear. 560.8 being a fib level. That will put 562, which held as a tough sell zone yesterday. And then the top of the chop range, the mother candle's high at 564. Bulls need to clear those levels to try to trigger some upside. I have the 5 DMA, which is sloping down, which is around that area as well. If it can clear and get above the 5 DMA and clear those levels I mentioned, we have a fib level at 566.4. If that clears, only if that fib level can recapture would I favor we go fill the gap. We have a gap around 571-ish, and then the 200 DMA is around 572.2-ish. Those levels can only be retested if SPY starts clearing resistant levels, 559, 560.8, 562, and especially 564. All right, so I gave you guys the bull case scenario and I gave you guys the bear case scenario. Uncle Charles is still overall bearish, but just like yesterday and especially this past month, I will be playing whatever level the market makers give us. I will be following the price action, because those who follow the price action, the money follows them. Okay? Triple Q also still bearish. Yesterday, it actually back tested the 5 DMA and had a very, very nice rejection from that moving average. I also have a fib level at 479. Overall bearish below the 5 DMA, and I'm overall bearish below 479. As of right now, it's around 476s, so I have support at 475.5 and 474 fib level. If those levels fail, then back to the downside we go. All right, back to the downside we go. I think we can go hit all. I have a fib level of 467.3. If 470 doesn't hold, then 467.3 would definitely be a target of mine. And if we break down that level, 466 or lower incoming. Now, if we want to get bullish, bulls have a lot of work to do. They need to clear 477 and 479 fib level. They need to get back above the 5 DMA, which is around 480.2ish. I have a fib level at 484. Those are the levels that must clear, and then maybe we go fill the gap around 487, and I have a fib level at 490. Where is that 200 daily? Look, the 200 daily moving average is around 493 or so. Overall bearish chart still. Bulls still have a lot of work to do. Like I said, clearing 477 and 479 would be the start that bulls need. Clearing 480.2 and 484 would be bullish follow through. We break down 475.5. We break down the fib level 474, 470, and 467.3 incoming, guys. Incoming. Now, Tesla had a nice gap up. Overall chop day on Tesla. It was still tradable though. If you could handle, well, the contracts are expensive, but that's what happens when volatility's up, guys. No risk, no rewards. But anyways, Tesla managed to get a close, one close back above the 5 DMA. You guys can see this downtrend. The downtrend when the moves to the downside were strong. Tesla spent majority of its time below the 5 DMA. We had some recaptures and it did lead to some decent level to level moves, but every false breakout of the 5 DMA led to more downside. Strong downside. It was like the market makers were telegraphing their movements before they wanted to push price lower. Well, for the first time in a while, Tesla managed to get a close back above the 5 DMA. Now, on this downtrend, the recaptures of the 5 DMA led to a little bit more upside, but every false breakout of that moving average led to a lot more downside. So if you are a bull on Tesla, short term, medium term, doesn't matter. You want to see 245 level hold as support. That's around where the 5 DMA is. As long as Tesla is above 245, bulls, at least for the short term, are safe. Now, if they want to show some bullish follow through, 246.5, 248, and 250 must clear to put higher levels in play. All right? They must stay above the 5-day daily moving average. Now, if you are a bear, you've seen it and you know it, that every false breakout of the 5 DMA has led to lower lows. And you also know that when the price action is very bearish, price stays below the 5 daily moving average. So if you're a bear, you really want to see 245 fail to put 243, 240, 238.6, and 236 all back in play. 245 is your equilibrium. Above it, a bounce is possible. Maybe for a few dollar moves or maybe for a lot more. But bulls need to stay above the 5 DMA, because if they fail to hold it as support and it drops back below, I can only assume that the bearishness that we've been having will resume. All right. Now NVDA got a bounce, a gap up. Is this it looking good? Looking good for NVDA bulls right now. Okay. Now 113 is the critical level. As long as above, more upside is possible, because if you look here, okay, it's all about structure of the price action. You look there, okay, that was the last pivot low of this structure. The structure of the downtrend is high, lower lows and lower highs, correct? So this was a pivot low around 113. NVDA recaptured that level and treated it like support yesterday, okay? That's a violation of the downtrend structure, which means it's a sign of bullishness. Okay, it could get invalidated. We have to be ready for any scenario. Now I have resistance at 117. If 117 can clear, guys, if it can clear, 119.5, 123, and 124.6 are all in play. Now, if we want to get bearish, we need to see support levels fail, and we need that false breakout setup. All right, 115 and 113 are support if those levels fail, you want to look to short 111, 109, and 107, and 105.8 would all be back in play. All right, guys, money magnets. Thank you guys so much for watching. That's what I have for you guys this morning. I'll be back later today with the aftermarket video. I love you guys. Peace.